ask you about volume and volatility. Tom, I mean, there's just no volatility. And, you know, that's one of the issues for Wall Street firms. They need to see volatility in order to see real margin in certain areas of the business. What do you think's behind it? Why is volatility at such historic lows?
Well, I'm not asking for volatility, just because with this low volatility, we're seeing the IPO market come back and you're seeing consumer
You'd rather see the stability
increase at the moment, because it's really kind of primed the pump in the IPO market again, which had been really dormant for 2 years. And so the low volatility is contributing to that. Ultimately, higher volatility will come back. There is a lot of uncertainty in the world. I guess I came on your show probably a year ago prior to the election, and I actually kind of said, geez, all things being equal, I expect volatility to increase. So I've been wrong once before. I'm no longer going to prognosticate when you're going to see the increase in volatility, but it's going to come.
How's volume doing?
Volumes are slow this year because of the low volatility as you described. Yeah, when there's more volatility, as long as it's not wild volatility, you get more volume. So this year, overall industry volumes are under 7 billion a year, whereas last year they were over 7 billion a year, and I'm referring to shares per day throughout the entire United States. But volume, yeah, we operate a volumetric business model, so as a business matter, it's better when volumes are high. But for society, if volumes are 7 billion and change or 6 billion and change, it's really not too big.
Yeah. What are you hearing? You're talking with all of the CEOs that are coming down, listing, and for meetings at the New York Stock Exchange. What kind of a sentiment are you feeling from them at this time in terms of business sentiment and the economy broadly speaking?
You know, in general, business sentiment is fine. The issues they tend to bring up with me because of my role are taxes. They still are very eager to see tax reform in this country. In fact, nearly every CEO brings it up. There is still a sense of optimism that it will get done, but there's also that optimism is less than it was six months ago. And the second thing they bring up is there's still a sense that it's a little too painful to be a public company in this country, that the litigation environment is intense. You know, there's 300-400 shareholder class action lawsuits a year. There's hundreds of activist shareholder campaigns, and don't get me wrong, activists serve a very valuable role. But those CEOs are trying to deal with that. At the same time, there continues to be greater and greater regulation, both from Sarbanes-Oxley, Dodd-Frank, and creeping regulation that doesn't result directly from congressional legislation. And so those are the two kind of twin issues that they come to me with. Geez, can you help us advocate for tax reform, and can you make it a little simpler to be a public company?
I think you make really important points right here. And in terms of the regulatory rollback, the president has had the most success, I would say, so far in this term by rolling back through these executive orders. So when you see changes to Dodd-Frank, how will that affect business, do you think?
Well, one of the themes that I do pick up on is exactly what you just said, which is even without acts of Congress, there has been less new regulation over the last 6 months than the prior year or two.
And you're feeling it. You're feeling it even in your role.
Yeah, and that's encouraging. I spent yesterday down at the SEC, most of yesterday, and next week on Tuesday I'm testifying in Congress about some of these issues. And that is the way the wind is blowing. Even with some of the new appointees at the SEC, the idea is, you know, we need to be a strong regulator, and your viewers need to have confidence that the markets are safe and sound and trustworthy, and we should do what we can in order to help business, because that's the lifeblood of the economy, helps create jobs, it helps make the world a better place by creating new products, goods, and services. So that's kind of a newer view and a hopeful view, I would submit, that I've heard out of Washington.
Will you discuss in your testimony next week in front of Congress, will you discuss some of the red tape and the implications of that, how the red tape and the bureaucracy of too much regulation has gotten in the way of growth?
Yeah, absolutely. I mean, that's the theme, and we have some very specific recommendations. We have a cultural and a tone recommendation, and then some very specific recommendations, and the benefits are great. One, we can have more IPOs. When you asked at the outset of this interview, how are IPOs going? And I said, oh, it's pretty good. Well, within the last 10 years, it's pretty good. But if you go back to 1991 to 2000...
Oh, different time.
We were doing 350 IPOs in this country. We haven't had a 350 IPO year since then.
Right.
So we constantly need to be asking, how can we improve our U.S. capital markets? They're the deepest, most liquid in the world, the most trusted. But that doesn't mean they will be 10 years from now. So the talk on Tuesday will be about what should we be doing now to position the U.S. capital markets to be the best in the world 10 years from now or 20 years from now.
And you've got evidence just by saying, look at the number of companies that don't want to go public.
Yes. Yeah.
They want to stay as private unicorns or private companies, not unicorns, but.
Yeah, I think maybe the pendulum is swinging back a little bit on that. We had Snap that you would have included in that group a year ago.
Right.
They're now a public company. There's been press reports about Spotify. And even with an Uber, and it's a difficult situation. In fact,
sure.
it's literally a tragic situation, and that never escapes my mind. But, the pendulum is going to swing back. The public markets bring discipline to a company. And they bring it very early on that very first earnings call. Think about Facebook's first earnings call when they didn't show up with a mobile strategy.
Yeah.
And so
Google
I think,
too, yeah.
I think one of the lessons from this difficulty at Uber will be maybe the public markets are more attractive than we had otherwise thought.
That's a great point to make, actually. You're right. We'll be watching that one.
Thank you.
Uber. Tom Farley, good to see you.
Good to see you.
Thank you so much.
Thank you.
President of the New York Stock Exchange.